Hey, what's up everybody? Welcome to another video from the Keystone Financial Academy. My name is Elliot, and today we're finally getting to the investing topics that I wanted to get to for quite some time. If you don't know anything about investing or the stock market, you've clicked the right video. This is the very beginning, ground zero, where I'll start with the basics of financial investing, and with my buddy Oscar the Bull here, we'll build a solid foundation for all the investing topics to come in future videos. Before we start, be sure to subscribe to the channel so you don't miss any of the upcoming investing and finance topics. And if you like this video, you know what to do. Smash that like button below. Okay, so what exactly is financial investing? It's when you purchase securities or other objects of value to achieve a profit over some time frame. This, of course, requires one more definition, that of securities. And those are, of course, financial instruments that hold some type of monetary value. Why do securities exist at all? Well, they provide a way for companies and governments to raise capital, in other words, money, and for investors to build wealth via potential returns when they buy or invest in those securities. So there you have it. Some really good motivation for everybody involved to either offer securities to raise money or to buy securities to try to make money. So what kind of securities exist? Well, most individual investors get involved with just three types of securities: equities, debt, and derivatives. Equity securities represent an ownership interest held by shareholders in an entity. In other words, you own a piece of the company. Examples include stocks, ETFs, and a few others. Debt securities represent money that is lent by the investor and must be repaid with interest by the borrower. Examples include bonds, certificates of deposits, and others. Derivative securities represent a financial instrument whose value is derived from an underlying asset. Examples include options, futures, swaps, and others. Now, of course, this is not a complete list if you consider all the other financial instruments and investments that are out there. Other asset classes exist that don't fall neatly into these three types. One example is Forex, or the foreign exchange market, where currencies are traded. Another example is commodities such as oil, wheat, beef, and corn. And there are numerous alternative investments such as private equity, hedge funds, and venture capital, just to name a few. We will discuss all of these in future videos. The topic of equities, debt, and derivatives is already quite extensive, and this is a great place to start for a beginner. Okay, let's talk about exchanges. In order to buy or sell anything, you need a marketplace where the buyers and the sellers can get together and trade goods. This is as fundamental now as it was 3,000 years ago. Whether it's goats and chickens in an open field or stocks in a digital realm, the ideas are the same, it's just the methods and approaches differ. All of the securities just mentioned are traded in either a formal or informal marketplace. All of these markets have once been operated by hand, but have long since become automated and electronic. The best known and the best organized such markets are called exchanges. And it's here that you'll find most, though not all, stocks and derivatives. Exchanges are well known, even outside of the financial world, as most people have heard of the New York Stock Exchange or the London Stock Exchange. If nothing else, they're major tourist attractions in their respective cities and are in the news quite a bit. The two major exchanges in the US are the New York Stock Exchange, or the NYSE, and the National Association of Securities Dealers Automated Quotations, much easier pronounced as NASDAQ. Both of these exchanges are open during the regular trading day, Monday through Friday, and that's 9:30 a.m. till 4 p.m. Eastern Time. So, of course, numerous other exchanges are located around the world in the major financial centers, such as the London Stock Exchange, the Japan Stock Exchange, the Shanghai Stock Exchange, the Hong Kong Stock Exchange, and the European Stock Exchange, just to name a few. Not everything is traded on exchanges, of course, as I mentioned earlier. Some things like bonds and some stocks are traded in what is called over-the-counter, or OTC, and the other assets I mentioned earlier, such as futures, commodities, etc., they have their own marketplaces, which we'll get to when we get to those topics. Now, to buy or sell securities, such as stocks, you need to access those exchanges. For years, there was essentially just one way to do it, using a broker. This individual was your gateway to buying and selling securities, and likely was in your list of professionals along with doctor, lawyer, accountant, forgotten, and so on. This method wasn't scalable beyond a certain point. After all, a broker could only handle so many clients, and there was only so many brokers. But with the internet, online discount brokers appeared, allowing easy access to buying, selling, and trading to the general public, thus opening up investing to really just about everyone. Discount brokers have become very large and well-known entities, and I've no doubt you may have heard of a few of these, such as TD Ameritrade, Fidelity Investments, E-Trade, Charles Schwab, Merrill Edge, Ally Invest, Interactive Brokers, Robinhood, First Trade, TradeStation, and T. Rowe Price, just to name a few. You can open an account with any of these discount brokers by just going to their website and filling in quite a bit of information about yourself. You then link your bank account to the broker, transfer in some money that you wish to trade with, and then just go ahead and purchase and sell securities. Although discount brokers are most often associated with stocks, mutual funds, ETFs, and options, they also allow you access to bonds, commodities, futures, forex, and much, much more. Now, it's important for investors to have confidence in the markets. The financial system is not without its flaws, but it is tightly regulated to minimize fraud and instill trust in the investing public. The government body most responsible for regulating the markets here in the US is the Securities and Exchange Commission, or the SEC. And you'll hear about them quite a bit as you're learning investing and later on as you become an investor. It's important to underscore this point that the vast majority of investments are not protected the way, say, a checking and a savings account is by the FDIC, or the Federal Deposit Insurance Corporation. The goal of the SEC and other agencies is not to protect your investments, but rather to protect against fraud and abuse. Okay, next we're going to hit up a few more concepts that are critical to understanding the stock market and to begin investing. And this first topic is the stock market index. A stock market index is pretty much what it sounds like. It's an index that measures the stock market, or a subset of the stock market. The indices are computed from the prices of selected stocks and help investors gauge market performance. Several hundred indices are used around the world, and here in the US we have several dozen. The best known US indices are the Dow Jones Industrial Average, the Nasdaq Composite, the Standard & Poor, or the S&P 500, and the Russell 2000 and the Wilshire 5000. A few prominent international indices include the DAX from Germany, the Financial Times Stock Exchange, better known as the FTSE from the UK, the Hang Seng Index from Hong Kong, and the Nikkei Index from Japan. If you listen to, read, or watch any of the evening financial news, there's no doubt you're going to hear about the performance of pretty much all of these indices. Among the US indices, each has their own niche, unique composition, and purpose. The Dow Jones Industrial Average, for example, is made up of 30 very large and stable blue chip companies, and the name, by the way, comes from poker, where the blue chips are the most valuable. The Nasdaq is best known for being tech heavy and contains most of the US tech industry stocks. The S&P 500 is considered the closest approximation of the entire US economy because it contains stocks of 500 of the largest companies in the US. This sizing is determined by the company's market capitalization, or in other words, the value of all of its outstanding shares. Finally, the remaining two indices, the Russell 2000 and the Wilshire 5000, attempt to capture a more broader picture. The Russell 2000 lists a lot of the small and medium-sized companies, and the Wilshire 5000 kicks things up a notch and is the true total market index, currently tracking about 3,500 companies. Despite the 5,000 in its name, the Wilshire 5000 hasn't actually listed this many stocks for quite a few years, but is still considered the broadest measure of the entire US stock market. Okay, the next topic you're going to hear a lot about in investing are the bulls and the bears. This just refers to what the market is doing. Fundamentally, the stock market can only move in one of three directions: up, down, or sideways. A bull market, represented by Oscar over here, is one that is going up. More investors are buying in and equity prices are increasing. The economy is typically strong and unemployment is low. A bear market is one that is going down as more investors are selling off and the prices for the equities are decreasing. The economy at this time is typically weaker and unemployment is on the rise. A sideways market is one that's neither up or down consistently. This happens when the overall economic outlook is unclear and investors are not sure whether to buy or sell. The overall trend averages out to no real movement one way or the other. Okay, the next topic to discuss are industries and sectors. In order to invest, you need to know what to invest in by looking at the overall economy. We'll take a close look at the US economy here, but this kind of analysis is applicable to any industrialized nation. The US economy is broadly classified by what are referred to as sectors and industries. Although the approach can vary some, 11 sectors and dozens of industries within them are generally recognized as seen right here. Also shown are the market capitalization, or the total value of each sector, and its percentage of the US economy as of 2018. To invest in the companies that make up the shown industries and sectors, you would use stocks, mutual funds, ETFs, and other tools. This breakdown is helpful when you're deciding what exactly to invest in. As an investor, you can focus in on individual stocks, or certain industries, or an entire sector. As a side note, the information seen here is interesting to examine in and of itself. It reveals that the biggest sector in the United States by market capitalization is information technology at 22.25% of the economy, which probably isn't much of a surprise given the enormous growth and success of Google, Microsoft, Oracle, Intel, Apple, Amazon, Facebook, and many others in that field. This was not the case just 30 years ago when industrials were much more prominent. Clearly, the US is moving away from manufacturing and into the information economy. Unsurprisingly, in second place by market capitalization, just edging out healthcare, is the financial sector, which has always held a preeminent role because the US is considered a financial and investing powerhouse. Okay, so that was a really quick primer on the absolute basics of financial investing and the stock market. From here, you need to learn about stocks, mutual funds, ETFs, bonds, and a few other basic investment strategies, and you're ready to do some beginner investing. Keep an eye on this channel for lots of upcoming videos on all of these topics, and when you're ready, take the plunge by opening an account with any of the discount brokers that I mentioned earlier. As always, don't forget to subscribe to this channel so you don't miss any of the upcoming financial and investing topics. And if you've enjoyed this video and found it useful, please smash that like button below. Thank you for watching, and I'll see you soon.